it and check. So let me make sure all the stuff that I have to say is on recorded camera. So let me mute you guys, allow you to unmute yourselves. Gotcha. How are you guys doing tonight? Anybody have anything fun they did? Something cool or exciting? No one, huh?
Just another day.
Just another day. Always just another day. Well, we look lucky to be here, at least blessed. We're super lucky, I think, in a lot of ways. We don't have
Oh,
that virus after all, so that's something.
yeah, you're right.
You gotta count it where you can sometimes. Okay, so I'm pulling up my screen real fast. Go ahead and share. You guys should, in theory, be able to only see right here and nothing else, provided my computer doesn't like to go haywire with me. So, a couple of things. Disclaimer: first and foremost, anything I say is based off of, it's for educational purposes only. I am not your attorney. I am not a financial advisor. These things are for educational purposes only, and they're discussed as theories and strategies and information to be used at your own will, on your own volition, to your own accord. So, having said that, please trade carefully. Do not risk what you cannot afford to lose. So, let's go to everyone, make sure the chat thingy is pulled up so I can actually see it. Couple of housekeeping things. I know Pat did a quick video on the coronavirus. We know that it's not necessarily the virus, but it is the perception of the virus, and just the markets in general are doing some really wonky things. And we'll discuss that as we click through some pairs tonight together of what to expect, especially in terms of swing trades and position holding. Totally different kind of strategies in mind, and being able to go to the charts naked and make sure you can see what you can see. But to answer a few of the questions, since I can't get to every single person on Telegram, I had quite a few people in the Super Easy group as well as in the mentorship group ask me questions about withdrawing taxes and things of those natures. So I will reiterate yet again that I am not your financial advisor. I am not your accountant. I am not an attorney. However, for those of you who are still working on your taxes, depending on what your liability is, and if you have a higher liability, you have a lot of options in terms of how much you've invested. Everything you do, a lot of the things in your home, your office, your computer, your internet, your cell phone, Telegram, Zoom services, YouTube subscription. If you guys have the paid for YouTube subscription, a lot of those little things that you guys subscribe to, as well as the Super Easy Advanced Membership Mentorship Group. All of those things are a tax write off, so including your losses. So your losses are technically a write off. You can count them off as a startup cost. You can count them off and reallocate them over the next 5 years if you are already profitable, or depending on how many years you were down. Everything you do inside of your broker account, you should get good at keeping track of it. A good accountant, which I am not giving you any advice, as you learn to file your taxes as an investor, because that is what you are, is an investor. But a good accountant, a good CPA is going to make sure that you have all the information. So you might, depending on your financial situation, be better off putting some of your broker accounts in trusts. This way it's out of your name. You might be better off making sure each of your broker accounts, especially ones with any notable money, are in the form of an LLC name. This way, when you withdraw, your LLC is actually getting the money. And of course, it gets more complicated from there. You can file that LLC as an S Corp. I know this is a lot of information, but for those of you who asked, I'm trying to give you as much as possible. At the end of the day, an accountant is typically cheap. So unless you're working with the actual CPA, you could pay anywhere from like 20, 60, 100 bucks a month. Or some people just do it quarterly. So they'll pay like a flat fee, 150 bucks every quarter, or just do the taxes at the end of the year. Um, so you have a ton of options, but just know that you can file this as a day trader, which would be a less taxable. It's taxed more as an income than a capital gains, whatever that 15% is plus social security and whatever. Or you can tax it as capital gains depending on how you have your financial situation set up. So are your losses able to be written off? Absolutely. How you should do it best for your scenario is an exclusive. It is not a universal thing. It only probably applies to you based off of your current situation, your state, your liabilities, your dependents, and your assets, among about a bajillion other things that I don't even know about. So I hope that kind of answers most of your questions in terms of that. Back to what Pat had announced in terms of the virus. Guys, we know the market is going crazy. So if you're position trading right now, do so mindfully. Stick with the trend, because I'm about to show you kind of what each pair is doing in terms of the trend. They're all massively trending. We had some big spikes this weekend, but otherwise, you see perfect straight moves on most pairs across the board. So that's saying something. So when it comes to the triple arrow system, looking for a reversal right now is a dangerous, dangerous game. So you're planning on maybe hopefully getting a pullback or a re-entry such as a Stairmaster. You should not be necessarily looking for a confirmed market reversal at this point because the markets are just way too strong. Now, are they all due a really good reversal? Most of them are. Almost every pair is due a huge reversal, but we don't have any proof or evidence that that's going to happen yet. So because of the market situation, the interest rates, the housing market, the coronavirus, the oil, and about a bajillion other things, the election, I don't know, maybe even the full moon for all we know, but it's a whole bunch of stuff going on. So trade mindfully. Are there any questions or comments in terms of that stuff? Anybody at all? Because this is your moment. If you're one of those people who messaged me, that should answer your questions about taxes or like the trendingness of the market. Going once, going twice. Okay, the nighttime people just not nearly as talkative. I don't even know what to do with that. But I'm going to learn to have my own voice on here, and I'm going to go ahead and continue. So everybody hosts these calls a little bit differently. I try to typically host mine in a very open format way. I find that people often learn best through participation. So what I want to discuss tonight, rather than clicking through 4-hour setups on the triple arrow system, because I mention all the time we have enough people doing that, I'd like to show you how I chart. So if anybody on here has not charted or does not know how, wants to control my screen or wants to share their own screen to learn how to mark up a naked chart on TradingView, find support and resistance, find a trend line, and understand how to trade those zones. Do I have any takers whatsoever who wants to learn through participation, or do you guys just want to see me do it? Totally your call.
I'll try it.
Hey, Terrico, how's it going?
I'm fine. How are you?
Awesome. Okay, so do you want to control my screen, or do you want, that's going to have a little bit of a lag in it, but it's doable, or do you want to control your screen and I will kind of walk you through exactly what I would do to find support, resistance, and all that other good stuff?
Okay. It doesn't matter to me either way. It's fine.
Yeah, I'm going to let it be your screen. So you've got about a 2 or 3 minute window to pull up TradingView on your computer. Make sure your browser is pretty clean so we don't, see it's not going to lag with all the other windows open, and just naked chart, so nothing else on it. And while you do that, I am going to show you first, just for Jetter who asked me, I'm going to show you first exactly what I do. It's rather simple. Why Terrico kind of gets his screen ready, and then I will walk him through doing the same thing I do. Most of the thing about trading and investing, at least with technical analysis, is it's so easy, people miss it. It's so simple, people don't know, like they overcomplicate it, they overthink it. And I was definitely one of those people. So trust me when I say I am not judging you. I was in the same shoes as you. So having said that, Terrico's getting ready real quick, and I'm going to kind of click through a couple things to show you. This is the 4-hour time frame. So I'm going to make it kind of ugly for a minute. If you guys notice, almost every pair, and I'm going to burn through them really quick just to show you and save some time, because as much as we love hanging out together, I'm about efficiency. If we go through almost every pair, we have these huge moves with very little pullbacks or reprieves. This is that Sunday gap. That was a huge deal. So again, huge move, no real end to it in sight. And if I go back in history, this long, it's ongoing, no real massive pullback, just continuing. We know the Australian pairs all kind of perform the same way. This has been going down forever, and now it's just staying down. I'm going to continue going. Huge move. So right now, trying to plan on a pullback or a reversal is just silly business. We're looking at markets like this. We did experience a valid market crash, and that is not Jenny's definition. That's the market's definition. So make sure you understand that we are not looking for any superposition trades at this point. Most of these pairs quadrupled their average daily range. Most of these pairs have dropped, okay, or rose accordingly with very little breathers. So something's got to give, and you have to decide if you're the gambling man or not, who wants to kind of be on the wrong side of this, or maybe even the right, because we've got a lot of moves like this where it's just nothing but up, almost every pair. So I don't know how many of you guys have been trading for a long time, but if I keep clicking, you'll notice this across the board on most pairs. And for anybody who has actually clicked through the charts once a week, This has very rarely happened. And I've been clicking through my naked charts once a week for a couple of years now. So to see every pair straight up or straight down tells you something is majorly going on in the market. Straight up, this is that huge news wick thing, whatever. Straight up. And I'm just going to keep going, kind of proving a point. GBP pairs got some movement a little bit better, in all fairness, I think. But again, straight up, down, every pair. So this is your evidence of an actual, this one kind of consolidated and played around. It is what it is. But dang near every pair has done the exact same thing. Straight drops and straight rises. Very, very little kind of wiggle room in the market. Very, very little. The US CAD has been anticipated to go down for quite some time. And as you can see, it's going up. Nothing stopping it. So right now, can we catch these pullbacks? Absolutely. Can we make money on them? Sure, we can. If we're reasonably decent traders, we can make money on any market. But every pair, and don't listen to me, go back and mark up your own charts. Look at every week. If you marked up on Sundays or Mondays, how often you would find almost every pair sinking or rising the way that this is happening in this current market. So it's definitely something to kind of be mindful of when you're taking these positions before you fuss about the triple arrow system, before you fuss about scalping or naked trading, or really anybody's strategy for that matter. Just be mindful that that's what we're looking at. So does anybody have any questions in terms of like knowing that these markets are very, very heavily trending and crash related? So your approach to the market should change exponentially as of these last few weeks than it has to anything else you've traded in history. So whether you were really successful in the last 2 or 3 weeks, or whether you were really unsuccessful in the last 2 or 3 weeks, your approach should be dynamically different than what you were going to do prior to this happening. Does everybody kind of super clearly understand that? Because it's, yes, sir.
I understand.
I mean, it's kind of a big deal for those of you who are quiet. I'm used to a little bit more talky, but it is a big deal. Please be mindful of that no matter what you do. So having said that, who wants to pick a pair? Somebody's got to pick a pair and put it in the chat, and I will mark up that pair. Totally your call. Jetter, Dottie, Dorian, anybody? Let's see. GBP, USD, Euro odd. Oh, Euro odd's good. GBP, USD was kind of moving sideways. Let's see which one we like the best. Okay, we'll do a couple real quick, and then I'm going to let Tarako take over, if I'm saying that name right. So say it again, Tarak.
Tarak.
Tarak, I say it wrong. I'm sorry. But I still appreciate you.
Yeah.
So first things first, somebody's got some drawing. Let me clear the annotation. This is super quick, guys. When I start scalping and stuff, I know I talk fast. I know I am not like super wise in how I talk to where I can say something in 3 sentences, but I'm proficient at trading, and I am proficient at doing things in a very quick and effective manner. And I've been that way with multiple businesses, with multiple different companies, with multiple different investment lifestyle, if you will. So it's something I get good at. So if you guys are willing to keep up and follow along, I don't want to take a lot of your time, and I don't want to spend a lot of mine. This is really simple. Every week I take a naked chart. So I have different settings on my oopsie, let's clear off the annotation tool on my trading view. Okay. To where I have different chart layouts that I have saved. This one I called naked. There are a couple of EMAs on here. This is my 8 and my 33. It's just kind of my foundational one. I already know that where the 50 is at because the 50 is on every chart I have. But either way, I literally go through almost every pair and I mark them up. If I don't like what I see, I skip it. Most of the time at the end of the week. So if I see something major happen, I'll even use our nice little tool that we have here where it says short position, long position. So for example, if I wanted to take a long position on this pair, because I knew it was going to pull back, not as a position trade, but as a temporary kind of, I knew this was going to give us a nice healthy pullback in and around this zone. Okay. I would leave this marked on there. I can even click on it and lock it to where even if I click around on the chart, it doesn't move it. Right. So at the end of the week, I can come back and see how many of these would have played out in the same direction I thought they would have. So in this case, just to show you real quick what I do, I would make sure I do that every time I kind of come in here and I see something that I like, or I see it bouncing off these zones. I'm getting ready to show you how I draw it. I do that on every trade. And then I have other chart setups that I use to kind of click through so I don't mess with or accidentally tamper with the lines that I drew. So I know how effective they are. If you don't do anything consistently, you won't understand if it works or not. Most of you guys get like barely mediocre at one thing, and then it doesn't work for a week or two, you quit, and then you go get barely mediocre at another thing, versus that silly Bruce Lee quote that says something along the lines of, don't fear the man who practiced 10,000 different kicks, fear the man who practiced one kick 10,000 times. It's the same concept. So having said that, here's the deal. Super simple. You guys can see my trading view. A good rule of thumb is you can use this. It's something that I started doing recently to give me a consistent amount of time. Because you got to think, if I scroll in or scroll out, I'm changing a lot of what we're seeing, right? So if I just scroll in and out based on time, I have nothing consistent to go off of. But if I use this, then I have a consistent amount of candles for every chart I'm marking up. And that's a duplicatable idea. So I do this, and I just refresh the chart. So anytime you mess with it, this right here down here, it disappears. But once you drag your mouse down here, it pops back up. All I'm doing is I go to the line chart. Okay. So for the purpose of this example, I'm going to take this off. This is literally the same thing as the candles, as Japanese candlesticks. Let's see, these ones are Japanese candlesticks, but it's in a line chart. And the reason why I do that is it takes away all the noise for me. It takes away all the stress for me. It takes away all the second guessing. And I don't have to wonder, well, where was the peak? Or should I go off of the tip? Or should I go off of the wick? Or should I go off of the body? Or wait a minute, this one was an engulfing candle. Or wait a minute, this one wasn't. Or this one has a Japanese candlestick pattern and this one doesn't. I don't have to have the answer to everything that every walking, talking expert, genius, guru, goat needs to have the answer of. I can do something that's duplicatable and consistent over and over again that works. So every week on the weekend, typically somewhere on Sunday, sometimes I do it Friday night if I feel like it, usually not. Usually I'm done with training by Friday night. But somewhere around that weekend time frame up to Monday-ish, I come to the charts, I click on the line chart, 4-hour time frame, okay? And I grab some trend lines, so you can choose to use the horizontal lines. Okay, you can use the ray, which doesn't go all the way across. So for this example, we're going to use the ray. Actually, for the top and the bottom, we're going to use a line. So for the very top line, so click on this again. For the highest, most peak on your chart, you're going to use a ray, an entire line. For the lowest peak on your chart, you're going to use a line. This gives you your, what a lot of traders will call your supply and demand zone. Now you can do the fancy thing that they do, and you can draw a nice pretty box, okay, to make it feel better. So you understand the difference between your support and your resistance and your supply and demand. But this is what I call my supply and demand. That's the highest, most, and lowest, most point on the most recent chart. From there, pretty simple and very consistently, okay, I'm literally going to start with price at where price is most currently at. And I'm looking for somewhere that has at least 2 peak touches. Now notice the difference in the line chart. You see these super clear pointy peaks, right? And then you kind of see these just play with areas. So understand the difference that I am looking for the peaks. Now this like little area here that kind of, I don't know, angles off. I know there's some smart word I don't know for right there. But either way, from where price is currently at, I'm looking for the next points of interest. Remember that this is not going to work. I'm not in that color anyways. So we're going to have to go to white. I'm just looking for an area. It doesn't have to be exact. Nothing is exact. And everyone trying to make it exact is just, it's a fool's errand, and it's only going to drive you nuts. So in this case, because I'm on this call, I'm going to measure the difference between this little peak right here, that baby, and then this line here, which would match up to this. It's only about 8 pips. I can deal with that being a window. So anywhere in this zone, right? Because here would be a touch and here would be a touch. So in this zone, in this area, okay, is a support and resistance. Super simple, not complicated. And that's closest to where price is currently at to the bottom. So closest to where price is currently at to the top. We're going to start looking left. Here's a nice peak at the same area that touches here. And you can tell because of my crosshairs, it touches here, it touches here, touches here, comes over, touches here. So this area we can say is a pretty good area because you've got a touch, kind of in this zone, touch, in this zone, touch. So those are our most recent areas of support and resistance. So real quick, without me yapping, you would see that this takes like literally maybe 15 seconds. Supply, demand, support, resistance. You can get massively carried away, especially if you see some consolidation, and you can draw a whole bunch more because there are clearly a lot more areas, okay, that you can go off of. But I like to look at the key areas and say, okay, so what are the most relevant points that I need to be focused on, nearest and dearest to where price is currently at? We're looking like we're going to hit some weak resistance because price did stall out in this zone a little bit, right? Here, here, here. So somewhere in this zone, we've got something going on. Okay, so if you're looking at it here, 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 this is all the same zone. This is a 5 or 10 pip area. It's not, you can draw a box. How wide or how many pips do you allow for a zone? Depends on the pair, prosperous trader. So you got to think on a GBP pair, 10, 15, even 20 pips is a pretty healthy zone. And traders like to post screenshots with this line drawn on them and say, woohoo, look, I got it. And in their minds, they're like a genius. They're the GOAT, you know, they're the expert. But the reality is this is a zone. Price can easily peak up above it and then drop from the sky. So this is just an area of interest. In this case, it's not a rather big zone from where, so from where we drew the line here to even this little area, that's 6 pips, to this peak, it's 9 pips. So it is an area, in all fairness. I mean, in GBP pairs, I'd say not more than 20 pips, but on other pairs, I'd say probably closer to about 10. Anything that moves very fast, 20 pips is a good zone. If it moves a little slower, has less than a 100 pip average daily range, 10 pips is proficient. Obviously, that excludes cryptos and indices. So anyways, back to this, we are getting at an area of interest, and there are a few others. So once we broke below it, we can keep drawing lines till our heart's content. In fact, some people do. I typically don't because I've got more proficient. I wouldn't even necessarily draw this next one until I saw price break through here. I wouldn't be too concerned, but for the sake of demonstration, okay, I'm going to keep going. So the next highest one from up here, we've got that nice peak. Okay, here's an area a little close, not enough kind of rejection. This one has 2 solid points of rejection. That's a solid rejection. We retested this as a retested area, and this hard bounced. So it broke through, hard bounced. I mean, I would count that one. Okay, 1, 2, right? So that's 2 times that this area was massively rejected reasonably hard. Other than that, we could keep going up, but until price starts breaking through, we don't have to. Totally up to you. But for conversational purposes and demonstration, we have quite a few more. This would be my next one. 1, 2. This is kind of a rejection area. It doesn't really count here, but you've got your most recent 2. Again, really simple. You have a few lines above and a few lines below. You guys with me so far? Not hard. I know I talk fast.
Yes, Jenny, totally.
It's not hard. Okay, so you've got your lines. Now, from where the candles are at, now I'm going to show you the candles. You'll see that it's not exact, but this is going to line up pretty close to the body. This wicked past it. So when I say a zone, I mean a zone. Okay, this was the price. This line that we drew based off of the line chart, okay, or ray, let's use the right terminology, kind of touches perfectly at the bottom of those the bodies of the candle. It ignores the wicks. It just gives you an area of interest, if you will. And notice this ignored these massive wicks quite a lot. So it tells us, it really simplifies my understanding. And it's not for everybody. It's okay if it's not for you, if it's not accurate enough. But for me, this was the most consistent, duplicatable way to do this every week. Otherwise, there's so many variables that you get tripped up and you don't end up doing the same thing every week. So for me, that's all I'm seeing. Now, to find a trend line, there's not a lot of options. So anybody can see that you've got this kind of downward trend here. We did kind of, it's not, again, not a straight line. So we did bust above it. I don't want to draw a line there because it's not a valid trend line. We broke above it. We've got an uptrend. This line I will draw. Show a trend line that we finally did break. Oh, of course, that's got to be black. Okay, make that white. That is a trend line. We broke below it. But we're not seeing any massive breakouts and retests at this point because the market is so heavily pushing in exact directions. So to mark up GBP USD, this is all I would do. So in terms of us right now, we rejected off of these lower areas and we're in an area of consolidation. Like that's what this tells us. There's not a lot of room in between here. And if we measure from where price is currently at to our next zone, that's 20 pips, 40, 60, well, 67, right? So if we were looking for a buy based off of the wick rejection or based off of EMA crossovers or our tools, or based off of rejecting off of this strong support area, which there's a very good chance we're going to get a nice bounce. You know that you could safely get your 20 pips, your 40 pips, your 60 pips without a lot of hesitation, drama, issue, or stalling out whatsoever. So,
Hey, Jenny, I had a question.
yes, sir.
Do you how can I put this? Do you wait till like Pacific times to enter the market? Like, do you wait for the GB pairs and wait till like London session, or you like for the US pairs, do you wait for the US session and stuff like that?
No,
Because I wanna place a trade on this pound versus the US dollar. I think it's gonna go up, but I don't know if I should wait till London session and wait till it do that false breakout, or
okay, so it's a judgment call. So like I'm not going to make a decision based on this trade based off of this information alone. It would have to be something like this, something that was hard rejection. It would have to be something that lined up with my indicators or another story. I would need more information. But just for this sake, let's say we wanted to take this trade. Like I don't mind trading provided I'm awake. But Devin, I had to get control over my life because just like with this business or any other business, if you let it, it will master you. It will take control of you. It'll take control of your life, your family, your marriage, your new, you just everything, right? Like it's bad because this is always available. It's so addicting. It's always check on your phone, chat in the chat, check the trading view, check the MT4, the MT5, and hey, there's this platform, and hey, there's this. If you let this dictate your life, you're going to let it dictate your life versus setting a schedule that says, this is when Devin looks at the charts. This is when I get to decide my time. If this is lining up and it's ready, I know what my risk into reward is on this trade. I know what's worth taking an entry on this trade. So I'm going to take it. And if it's not ready or I miss the move, then I'll check again when I wake up in the morning. So I wouldn't have an issue taking this trade provided it matched my rules. I know that there's triple arrows up here. US dollar has so much going on. I do think we're due a pullback personally, and we're going to definitely bust. I mean, I think to this zone, we might get somewhere out of it. But either way, if I'm going to take this trade, I'm going to take it confidently and I'm going to bed. So I'm not going to stress about it. I'm not going to freak about it. And I'm going to take it based off of my availability. And I'm not going to do that whole, I got to trade GBP in GBP. I got to trade this in this time frame, or I got to do this in this time frame. I got to get up for London. I'm just not that girl. Sorry.
I feel you. Thank you. I appreciate that. That really helped me.
You are welcome. But we'll keep that on here. So if we were to take this trade in real life, okay, let's move it over. We know that our stop loss would need to be below that wick. So that's about a 40 pip stop loss. We want at least a 1-to-1 risk to reward ratio, right? So we have that if provided it comes to here, which there's no guarantee, but our target would be at least 1-to-1. So that would make the risk worth doing, right? Is at least greater than 1-to-1, and that's bare minimum.
Yeah, I feel you.
There you go. If this happens to play out the way we want it to, great. If not, well, it is a consolidating market. We can hop to higher time frames now, and we can see that we shot up. We definitely need some type of a pullback. We might not get all the way to that 67 pip area, but probably to the 40 before we finally see the drop or the indecision side if it's going to continue back up. So, because we've never retested this breakout move either, so it's doing something, that's for sure. So, but for the person in the chat who said, Miss Jenny, how does supply and demand zones of interest compare to Fibonacci levels? So the next pair will bring up Fibonacci, but this is kind of literally all I do. Now for conversation, let's put back on my 8 and my 33, go back to the 4-hour. We know that we're getting ready to have that crossover. We know that we're going to pull back. Okay, so I would be anticipating a pullback personally. And somewhere in and around here, I'd be looking to re-enter for the seller, kind of to see, provided what my other indicators and my rules are lining up, I'd be looking to sell this on the continuation after it gets done with whatever it's going to do. Fair enough? When would you consider using the day or weekly? Simon, I would consider using the day and weekly now. So this is what I do every week. But in today's market, with how crazy it is, you're better off going to a higher time frame because something massively is pushed. So let's go to a different. Let's leave this as is. I won't change it all week. We'll even lock this. Okay. But so let's now go up. Who else asked what? Euro odd was the next one. I'm pretty sure this is the one that's pushed up massively. Huge push up. So if we stay on the 4-hour time frame and try to do the same thing, we don't have enough of a story here. So let's do this like we just did together. Oh, let's go to the line chart. We're on the 4-hour. Here's our peak. Here's our bottom. A little harder to draw because those little things point up. That is way too big of a story. And there's not enough in between telling us anything since price is at the top. If price is too close to your supply or your demand zone, you need and you owe yourself to go the next higher level. So we just did that. And now we're going to refresh the chart again to stay consistent. And again, we have nothing to go off of. We're too high to that level. So let's go to the weekly, same concept, monthly, same concept, really. We're hitting this area, which we already cleared this zone. So I want to bring up candles to see a clearer picture. We already cleared this zone to give you an idea. You guys see that? Now we wicked down, but we are definitely due a pullback. This is it's definitely a move. So totally up to you. I would consider using the daily or the higher time frames if price is too close to the supplier demand. That's when I would consider using the higher time frames. Dottie, no worries. When we get your internet, then we'll get it there. Let's see if I can answer your questions for those of you who are private messaging or not chatting. How do you know where the market will go next with all the zones so close together? You don't. So how do we go deal with that once we have those zones drawn? Let's go back to GBP USD, go to the 4-hour time frame. Right, we rejected off of this bottom zone. We rejected off of here. Okay, we've got 2 wicks to the downside, a doji, right? That's a big wick. So now that we are above this zone, trading in the zone means we're going to the next zone. That's all it means. And it's probably the most simple, elementary thing possible that most people would not possibly believe is possible. It just means you're going to the next zone, which is here. But you're going to come up in and around this area and you're going to wick and reject, or you're going to break and retest. That's what trading in the zone is in very simplistic terms. I hope that answers most of your questions. But let's go to Euro odd for those of you who asked. 4-hour time frame. I'm going to right click, clear all drawings to start fresh. 4 hours, line chart. Remove these. Remove. So for the person who asked about Fibonacci, here's the problem. And look, there are experts who are way smarter than me. And I'm sure maybe some of them have more 7 figures than I do, and some of them have more 8 figures than I do, or own more assets and properties. I don't know. I can just tell you what I know with where I'm at in life. So this may or may not help you. It may or may not, you may not agree or relate, but ultimately that's totally up to you. Here's my ultimate problem with Fibonacci. So I don't need to be an expert in how to draw it. I don't really use it too often. It definitely has a value. I know where to find it in theory. Fibonacci. So if we had came to the chart right here, right? This would have been 100. Well, here, let's make it backwards. So let's do it right. So let's say we had checked the chart right here. This would have been 100% of the move. Do you guys see that? Like that's 100%. So from here to here, if this is when we're checking the chart day and time, this is 100%. Hold on, manage participants. Mute all. Check. There we go. The problem I have with Fibonacci is if you had checked the charts here at that time, those would have been your numbers. If you had checked the chart here at this time, this would be your numbers. If you would check the chart here at this time, this would have been your you know, 31 point whatever. This would have been your 50. This would have been your 60. This is 78. So it's all, because the market is ever moving, this means a lot, but it really means like nothing. And I'm sure somebody who knows more than me can explain it better than me. But since this is an evolving chart and time is consistently moving forward, if we check the chart here, this is our 31.8 retracement or whatever. And then of course it comes down there and we say that's perfect. And if we check the chart here, this is our 30, 38 point whatever retracement. And again, we say it's perfect. If we check it here, this is our 61.8 retracement. And of course we say it's perfect. If we check the chart here, well, this is our 61.8, you know, retracement. And of course we say it's perfect. But every one of these is technically right and none of these are wrong. So which is it? That's the problem. So if we check the chart here, here's our 23.6, right? But if we had checked it here, our 23.6 is here. If we checked it here, our 23.6 is here. So it's all relevant. It's all irrelevant, and it all continues to move. So none of these have any massive value to me at all. And I'm not saying that this is like the end all be all. There are a lot of smart people who do the what is that, the, you know, universal numbers and numerology, and they're really awesome people, and I'm sure that they know what they're talking about. But for me, why am I going to have this massive target that says I check the chart right here, and then I know for sure, I'm pretty confident we're going to get about a 50% retracement, and that's about bare minimum, because at here this is, you know, 50%, at here this is 50%, at here this is 50%, at here this is 50%. So this is ever evolving, ever moving based off of the time and day you check it. So what value does any of this have? Does that help answer your question? Oh, sorry, Tarak, I missed you. I was going to let you come on, but I guess that's okay. I'll have you do it next time.
Helps me, Jen.
I'm glad, Lucas. Thank you. Thank you for speaking, man. These people are quiet.
You know me.
I know, right? I called you the loudmouth from the East Coast today, but it's so. And this, either way, guys, this is all I see when it comes to Fib. It does not make me better than in any way. There are some real actual values to some of these sacred numbers. I am a numbers girl myself, but the value of it is definitely interpretable. And to me, it's an ever evolving, ever moving target. Therefore, the target has no value. So that's how I see it. How my support and resistance zone, if I mark it here, and then of course I say my resistance is here, of course it sounds really snazzy and I sound like a really smart person and a, you know, awesome girl when I say, hey, the price is going to come and retest the 23, whatever. And then it does, because right here it's right. Okay. But as it evolves, like every one of these pullbacks could mean something or nothing, and it has just no value to me.
Hey,
So,
Jen,
yeah. Yes, Scott.
I think you're drawing those backwards.
I am.
You're drawing them in the direction of the trend rather than the direction of the trend and where it reversed. So you'd want to be coming down from the downtrend before.
Whoopsie. Delete. Let's see, from here to here.
Yeah. So it'd be like that. And the fact that it blows through it just means that our trend has changed. We've gone into an uptrend. So it's no longer a retracement. You'd be looking for bounces off of some of those levels. You know, in fact, you're getting some, you know, you're getting a brief bounce off the 61.8 annotation tool. So a brief bounce up here on the off the 61.8 and a little bit of interaction with that. But ultimately it blows through the 100% level, which is here.
But here's what I'm saying, ready? So even if, so let's say this is when we check the charts, right? So this is the top and this is the current bottom. So
Yep.
this top and this was the current bottom. Ultimately, this number keeps moving, but yet it's always accurate.
Right. However, it does come up and bounces off. What is that? The 50%?
But this
Yeah, that's a 50.
this would have been the 50 if this is when I drew it.
Okay. So it penetrates into the 50 and up to the, you know, it's right in here. So it's a reasonable retracement, and it does reverse and keep going.
So look, I can do the same thing here. So this is just like how I see it. Do the whole numbers in quarter theory technically have a value? Absolutely. But do I think the price is just going to stop because this says 0? No. But so hindsight's 2020. So like they have all those silly sayings that when you go to look for a yellow car, of course, you're going to see lots of yellow cars. But if the same investigator asked you, hey, how many blue cars did you see? You wouldn't be able to answer that because you weren't looking for the blue cars, right? That's all that, mind over matter
Well,
stuff.
and it also works because a bunch of people use it.
That's the perspective. So the best example would be Scott's, definition of perception, right? So because the perception or this perspective of this is that it works, it's going to react around this area because of perspective alone, right? But ultimately, if I keep doing the same thing with every one of these, so if I check the market here at any of these points, if I check the market here, and I can make this so ugly. If I check the market here and this is where I was looking to get in, all of these are technically right. Every single one of these are all the 76, 78.6. Every single one of these are the 61.8. Every single one of these are the 50 based off of the second I check the chart. So
Well, I think that when you get a shallow retracement, it sort of invalidates where you've drawn it. It blows through, so that level is no longer valid, and you haven't gotten a deep enough retracement to have it be worthwhile looking at.
well, yes.
You know, I don't trade fibs, but I'm aware of them.
Yeah,
And I think part of the reason that it works is that when you look at a retracement, you say, okay, price has come down here and now it's retraced about that far. That looks about right. That feels about right. It ought to be turning around.
That's about 61.8 right there. Well, that's about what? That might be the 38.2 compared to this.
Yeah, something like that, So it's going to be one of those things where somebody looks at it and says, okay, maybe that's close to the 50% or whatever it might be.
Well, yeah, I've done that. Lord knows I do that. So that's 320 pips. When it comes back up, that's about half of it. Yeah, I can see
Yep.
that.
So the fibs sort of line up. 50%, the 0.5 isn't technically a fib number. It's jammed in there because it so frequently works. Because people say that looks about right.
Yes. And I do that. I'm guilty of that. I'm 100% guilty of that's about a 50%.
Yeah. So, that's sort of why it works. I don't think there's anything magic about the numbers per se, but because some technical analysts in the past have looked at it and said, okay, this works, then, a bunch of people start looking at it and think it's the big magic thing of all times. And a bunch of people start trading it. Now all of a sudden it works. It is the magic thing of all times.
That's that perspective. You said that so wise, and I can't remember how you said it. I even told somebody about it. I was like, man, he said that in the perfect sentence, something about perspective and perception. I was like, yeah.
Perception trails reality by some period of time.
That's it. So perception trails reality. Perception trails reality. But that's really what it comes down to for fibs. So I hope that answers your question about the Fibonacci. That's just again, I am not somebody who went to stockbroker school. I'm not. I got pretty good at technical analysis and following some basic rules. And my asset is not that I'm a genius or a fundamental, expert. It's just that I got good at being able to say 1, 2, 3 and do the same thing 1,000 times, tweaked it enough times until I got it right. That's it. That's really it. It's nothing fancy. It's nothing expert level. So
Another great parable from Scott.
yes. He's our wise guy. We called him the wise old owl this morning. We definitely did. Okay, so back to this, guys. I hope that answers those questions in terms of Fibonacci. Euro odd, like I said, Tarak had to jump off, so he's not going to share the screen, and that's okay. I don't need to necessarily have somebody else do that. This is literally as quick as you make it. For those of you who are in the mentorship group, I took 11 scalps today on NAS 100. Every single one of them closed in profit. I think I was on the phone with Donna for a few. We were just BSing. I took 2 from the class. I think we called 3 or 4, but I only took 2 of those. And then a few other times, these trades took minutes. Of course, I have a few swing trades that I am looking into or still in a few day positions. But when I mark up my charts every weekend or every once a week, this is a very short experience. This doesn't take me a lot of time. I come through, I make a decision on what I want to do. And then when I go to take a long-term swing trade or a day trade, I come back and I reference those areas of interest and I say, okay, well, do I have enough room between the zones? So because of all these pairs are trending so much, I can't show you how I would necessarily trade the trend line breaks without going back in history. but I can show you again, and we're going to look through another pair from one of the ones you guys requested. This one again is just too trendy. It's too straight up. So let's go to Euro NZD. I think I like this one. All of these are all straight up. So we have to see. That's a nice pullback. Odd JPY went crazy. CAD CHF. You guys see all of these pairs. Scott, you have to admit that this everything dropping and going high hasn't happened a lot, has it?
No, this is crazy. And you look at those levels, I forget what the pair was that you were looking, where you had to go way back to 2009 to find prices that were similar.
Yes.
It was Euro Aussie. So what you're looking at right there where your cursor is, I mean, that's the beginning of spot Forex.
Yes.
And so, this was the financial crisis, that big peak up there. And then, we're kind of starting to approach that territory.
It is. It's kind of sorry, I can fix my mic. I'm sorry if it's going in and out. It's just this wick rejection, it's a massive wick, but there is something massive happening, guys. Please be careful. I'm not looking for any swings right now. I will scalp with you. I will not show you my one strategy, but I will flip flop with you guys on Tuesday nights if you want, and just look for some really short-term trades. But something is happening. So trying to find the next area of interest, if this is what we have to go off of, there is nothing but blue sky. So if we do kind of get a retest, there is blue skies ahead, and that's scary. It's scary for our economy. It's scary for the people, because this would mean bad stuff is going to come. It's just too much pressure. There's not enough value behind these currencies or stability behind these countries to back those moves that are happening in the market. There's not enough of any of it, whether you're talking about the housing loans or any of it. So just something to go off of. It's going nuts, crazy. Anybody got a certain pair that isn't totally nuts? Because I think they're all pretty nuts.
I think somebody was asking about UCAD.
UCAD, I want
I'm
to.
not sure about that, but yeah, UCAD.
So same story, let's do it together. So if we click this refresh button, here's our top. We're really close to our top. So we know, here, let's go to the line chart. We'll be consistent with what we're doing, because only things that are consistent are duplicatable. If you can't do the same thing the next week, then you don't have anything that works. So because we are so close to the top, we have no choice but to get another time frame. So let's go to the daily, refresh it for consistency. You've got nothing up here. Let's go to the weekly. We are kind of coming into an area. Come on, silly. That's a pretty big zone, but we broke through that. Monthly. And this is where we're at. You're odd. So we're in this zone. I'm going to go to the candle view just to see what we got around here. We wicked above total rejection. This area is probably the closest thing we have, and we're already there. So what we see from here, this is the monthly time frame, is going to be a telltale sign. Now, granted, this isn't a massive mover, so this isn't as many pips as we think it should be. It's only 600 because it's kind of a slow mover. But we'd be looking to sell, hopefully, provided we get the information to do so. So going back to the line chart, we refresh. We've got a top and we've got a bottom. So now we're going to use our little horizontal line array, and we're looking for the next areas of our interest. And because we don't have a lot to go over to the left, we're going to have to wing it. We're going to have to look at what we're doing and say, okay, so where's the most recent peaks? And there's nothing above us. There's not a lot. We already know that. My favorite zone would be this one. So this area, and on this one, we'll draw a box together. This would kind of be my target currently with where price is at. And the reason why is we have 1, 2, 3, 4 kind of in this area, right? So this would be a good target. So even if it doesn't necessarily fully reverse, we would see it pull up and then break down to at least here, which would give us, from where price is currently at, a safe 100 pips. And that's really all we're looking to get. Now, mind you, there's a lot of news, and of course, there's a ton of stuff going on economically. So you would need to wait. Ultimately, you have to wait for some confluence. You have to wait for some evidence that price is turning around. So in this case, because we're at such a high level of supply and demand, I would start going down to the smaller time frames to see if I can't get a trend line, right? So we just need a valid trend line, which is two touches or more. So as the expression goes, 1, 2, run it through. That works for me. It's not fancy. That is a valid trend line. 1, 2, 3, 1, 2, run it through. And if I go to the candles, we stopped here. We wicked off of it in these two areas. We stopped here. This is a valid trend line. So before you guys look to sell this pair, you would be looking for it to break this trend line. So let's draw it on here. Let's use arrows and let's make them red. You'd want it to break below. Let's make another arrow. Retest somewhere in this area. Okay. And then you'd want it to come down to here. That's how that would work. Does everybody kind of understand? No indicators, nothing. Super simple. You're at a supply and demand area. You do have some levels of support and resistance. It could definitely stop here. So you might not get the full trade. You might only get to this first line. Okay. Break, make a slightly higher high, fake everybody out, take their stop losses. We know the market loves to do that. And then drop. Does everybody kind of see how simple or how that works?
Yes, ma'am.
Does anybody have any questions on that? Is there anything I can possibly help you understand slightly better in terms of some of this stuff? Gonna lock it, it's locked. So remember, this doesn't mean we're entering. We're only entering when we get the confirmation. As of right now, we need to break the trend line. So we definitely have our pullback, but we could easily just continue to the upside. We can make a double top and then break the trend line. So that's very possible too. This is it. This is real trading. And if you do this with say 20 pairs a week, and then you actually lock it to where even if you move everything else, you don't move that to where when you come back, you can say, whoa, wait a minute. And you'll see most of the time, what you're going to see is, okay, well, this one will hit your stop, but you would notice this had a better than 1-to-1 risk to reward ratio. What you'll most of the time see is you'll get greater than your actual targets on a lot of the pairs. A couple of them will hit your stop loss. And if every week you actually just calculated up how many you got wrong and how many you got right, write down why you got the ones wrong, you got wrong, and why you got the ones right, you got right. And then each week, what you're going to notice, even this is even without trading. This is just like a good old fashioned study like you did in college and high school. Get out a comp book and write this down and say, okay, well, I would have won this. I marked it up on Sunday. Or you'll say, hey, well, when I mark them up on Tuesday is too late. And you're going to say, hey, well, if I do this, you'll get it down so well. And then week after week, you start to see that, hey, out of 20 pairs, I made 800 pips, one entry, one time. Out of 20 pairs, I made, 1,200 pips. Out of 20 pairs, I only lost 2. I got 18 right. I did 1,800 pips, or I did 1,500 pips. And then when you go to trade, your confidence and your understanding and your rules are amazing. So, but that's it. That's all I got.
Hey,
Hey, DJ, how are you?
I'm good. How are you?
I'm good. Are you going to be one of my guys in the morning to help me call trades so I can start teaching other strategies for the scalping?
Yeah, I got it. Yeah.
Okay,
You can count on me. You can all be too. I'll be there. Just like I said, you might not a little maybe sometimes. So
I know, right? We got to work on your choppiness. It's all kinds of choppy. You're all breaking up.
sorry, I'm at work again.
No, it's okay. What's your question?
Should I just text you?
Oh, yeah, just message me. I would love to hear you talk. Yeah, trust me, I would love to hear something other than my voice, but just message it. Message it so I can hear you clearly. Better who asked me when my scalping sessions are. Currently, they're Tuesday and Thursday about 9 a.m. We know that the market time changed because of daylight savings time, so it's a little off, but it's super easy. Sometimes we take a lot of scalps, sometimes we don't take many. Most time we hang out, we talk different strategies. There's people other than myself, and it's kind of cool. 9 a.m. Eastern time, that's correct. But what we're looking to do is using NAS 100 and gold. Gold would be a higher time frame than NAS 100 and a couple other indices see how far we can compound an account. And here in a couple weeks, after I deal with Pat and all of his tax nonsense, yay, I am going to talk to Pat about doing a cruise actually for the whole Super EZ family. So for those of you who are listening, I'd like to give away a cruise for whoever holds, I forget, I think it's holds the trades the longest. So for everybody gets an entry for those of you who collect, let's say, more than 100 pips on a trade. And it would be at instead of only doing the challenge within the mentorship group, I would run this challenge in the whole Super EZ crew, and I would buy you and one guest a cruise, possibly drink package included, depending on how many pips you got and how many entries, but to kind of run a contest for all of Super EZ. And yes, the scalping sessions are 9 a.m. on Tuesdays and Thursdays. And I will do a really short scalping on Wednesdays as we do the challenge a little bit more too. So do you believe naked trading is more accurate, profitable than solely relying on indicators? No. So DJ asked, do I believe that naked trading is more accurate and profitable than solely relying on indicators? I believe that it can be, but again, so it is only when you do the same thing. So if you're going to become an expert at Japanese candlesticks, then become an expert at Japanese candlesticks. If you're going to become the guy who always trades only off of the supply and demand, so the highest and the lowest on the chart, then get good at that. If you're going to only do something, is it possible? Yeah. But the problem is the naked charts have so many variables to get any one set of rules, I feel like is a lot harder. So like you guys who trade with me know that I have sets of rules for swings, sets of rules for scalps, and they're pretty simple. They are not complex. But when it comes to something like this is, for example, this is, let's use this as the chart because we're on this chart. So I can say, hey, if we break the trend line, I'm taking it. But if we broke the trend line, right, and we still had a lot of upward momentum, okay, if we broke the trend line and we didn't kind of finish this M, so let's say we broke it now. Let's say this broke the trend line. So let's say this was the trend line. Technically, I broke the trend line. So depending on when you saw it, this is below it, right? This would still be a valid trend line depending on who drew it and when you drew it. Because there's no consistent way to draw some of this stuff. It's all very lenient, if you will. So great, we took it, and then of course we came back up, and for some people who trade very risky, that blew your entire account on this baby move. Another problem is when you draw lines, with the exception of a few very exact thing, they're almost never in the exact place. So catching a strategy that actually works and is variable enough to match different pairs and loose, how do you say, loose enough to be able to do it on a GBP pair and an index pair and a US dollar pair and have it trade the same way, it's just not possible. Plus, I mean, you're looking at so many different things. On the 1 hour chart, this looks pretty valid. On the day chart, you're coming up on this zone. Let's refresh the chart. I mean, we definitely are due a pullback. On the monthly chart, oh my goodness, this is all saying sell. But we can very easily, trying to time a top is one of the best and worst ways to trade for a naked trading strategy. And we all know that trying to time a top is the worst way to trade because everything you see was the top. It's the same concept with trying to use the Fibonacci. Everything you see is the top. And we can draw it on here any way you want. I mean, we can say, hey, this is where we're currently at. Let's draw a vertical line for price. Let's say price is here. This is when we're looking at the chart. Let's make this a color we can actually see. Let's make it green. So this is when we're looking at a chart. We can use Fibonacci one of about 500 different ways they've taught us. So we can go from here to here, okay? This being 0%, as long as we come back up, once we break this, it's 100%. We can do it from where price is currently at. It's the kind of same concept from where price is currently at and say, okay, so how much have we moved so far? How much, if we're expecting a pullback here? But if we're expecting this to be the top, every one of these is the top when we're looking at it. It's all the top in hindsight. Oh, come on, let me delete this, please. So for example, DJ right here, let's make a circle. If we had solved this, we would have seen the wicks, we'd see this impulse, we'd know that we have to retest it. We'd be looking for a pullback. We know that price stalled out in and around here. We know that price stalled out here. See these wicks? See this, how price stopped in this area? We wouldn't be waiting for this to turn around. So there's a good chance we're going to bet our butt on this. In fact, some of us did. I know I tried to sell a couple of times during out this big, huge. Oh, I hate when I do that. I don't know how to undo it though. Reload. Love that. Bear with me if I can. Nope. Sorry, guys. My magic mouse only messes up when I'm on a Zoom with you guys, but it never fails that it messes up when I'm on a Zoom with you guys. Ever, ever. I know, there you're laughing at me again. God doesn't like ugly. See? Okay. Well, good enough. You guys get the whole point. I mean, if we had chested it here, this would have been 100%. We would have been looking to sell. And we would keep looking to sell over and over again every single time. Because at this moment in time, this is the top. We would have had this big, this nice little doji kind of candle, wick to the top side, couple bearish candles. And this is when we go to put our entire lot size on it and boom. So let's say we get to here. We know price rejected here. Again, same kind of concept. Timing the top is a very risky business. In fact, people have been doing it from here to here to here to here to here to here to here. And a lot of times, would it be enough to get a pullback? Sure. Sometimes you will. But just for me, I have yet to find it consistent. And of all the people I know who like pay their bills, make more than 5-10 grand a month with trading, I don't know any of them who only trade naked charts. I have yet to meet anybody who makes like a sizable income from naked trading. And that could just be me. I could be wrong. Honestly, my strategy and that special MACD based off of that Scott built is in the other group. So we will not explain it on here. No. Awanda as a broker, I don't use Awanda because the leverage is too low.
That's an understatement.
You can do, yes, right? So DJ, the people who swear by harmonics, they're good. They can be good, especially if you're using them the right way. Sorry, I can't. I'm just gonna go to a new trading view. Let's go to, I can't undo that. I'm that smart at this. There we go. And I'll close this one. Leave. There we go. So I'll close this out. For people who use it right, but some of those, the only problem is some of those free indicators. So not the one that like IML has. The one IML has is real good, obviously. There are a few other versions that are really good, but some of those free ones, they tell you, for example, if this was a harmonic pattern, they call it here, anticipating it to go here. So they call it before it happens. And some people trade it. Hold on. Let me mute everyone. There we go. Somebody's got some background noise. Hey, whoever keeps unmuting yourself, please chill so I can get off and you can get off. Pretty please. So it depends on how you're using it. If this was a pattern, for example, some people call the signal here. And then they say that this is whatever, and then you're going to finish the pattern, and they call this the entry. I feel like the people who call this the entry, which is like what IML does, I think that they're really accurate. But if that's how they see the market, that's great for them. If they're withdrawing and successful, they should learn everything they need to know about that. But does it mean that that's going to be necessarily how DJ sees it best? No, because they reset all the time. I mean, again, it's one of those things. They're not bad, but supposedly they have the better side of 70-80% accuracy. So if you treat it like you would a zone, so when it gets to this zone, you're only going to go to the next zone and you only ever go to the center point of the harmonic, it works really well. But there's so many, because there's the 5-minute, 15-minute, 1 hour, 4 hour daily. Higher time frames, the better the results, obviously. But the stop loss is large. So, but have you had any? Do you actually practice with them at all? Camry, on this chart, I have the 3 and the 8. So the 8 and the 33. I mostly use the 3, the 8, the 33, and the 50. That's pretty much it. We use special indicators for scalping based off of my strategy that was created with me and a couple of friends and partners. And it's a really good strategy. It works very, very well. And yes, that has special built indicators by Scott. He's the kind of coder and the genius and the wise owl. He built this thing that really, it does all the things that my mouth kept saying to do, but he did it in a computer version. And he did it exponentially well. So he put the lot size on there, ATR, proper risk management, proper entry alerts, re-entry alerts, biased. It does it all. When I say it does it all, I mean, it seems really simple, but when you actually learn to use it, it does like it all. So yeah, I feel the same way, DJ, with that whole harmonics. Now the next scalping class is on Thursday morning. That's only in the advanced membership group. Are there any other questions, comments, and all the other good jazz? Anybody at all? Did he do it on Mac? No, he doesn't like the Mac, Derek. You guys are against my Apple products, and we all know they're way more loyal anyways. They're way better.
Hello, Jenny. How are you today?
I'm good, Dietrich. How are you?
I'm doing well. I wanted to give another shout out to Scott on your behalf and the rest of the family, because he solved the problem for me I was having with my demo as well as my live accounts. And he didn't have to, but he went in and helped me out tremendously. What you guys do is so phenomenal. Aside from that, I want to give a shout out to Derek. And I haven't heard from Cut the Rope in a while. I want to know how he's doing out there in Saudi Arabia.
I know. I worry about him.
I don't know. I hope he's doing well. I love everybody in this family. And Derek is there every time. Night class, day class. He's there talking trash. I love to hear him. I love you all. Thank y'all all for what y'all do. I'm gonna go and silence myself now. And personally, I'm a moving average fan. So I love 2 or 3 EMAs or kick butt all day with understanding impulse correction. I think that's my thing, and I love what y'all do. So y'all keep going. I love y'all.
Awesome. Hey, Dietrich, we love you too. What's your favorite EMAs real quick before you go?
Oh, I'm sorry. I have muted myself. My favorite is 8, 20, 50.
Nice. I'll see. Those are my favorites. So mostly my favorites. See.
See, if price crosses below the 8, if I was in a buy, if it crossed below the 8, get out. If it goes above the 8, and you just, I think the 20 is a 20 or 21 is the bomb. Just ride that way. And if it's 20 is above the 50 and it's going in a direction, take the 20. But if price goes below the 8, get your butt on out of there before you get yourself hurt.
I know. I thought he was a rapper.
Hey, DJ said you need to get on the radio. You need to be like on one of those slow jam radios. Is that the voice you're DJ? That's what I'm hearing. He's like,
Yeah, that's what, every time we talk.
Pulled out his Barry White voice, huh?
He does. He's got that slow jams voice. Tonight, Sunday night slow jams. That's awesome, though. Well, we appreciate you, and I know Derek is always there. There's a few of you guys who are always there, so let me give you guys some love and say that I appreciate you for, first off, always showing up. Second off, for allowing me to make an impact in your life, and being willing to learn, being willing to listen, being willing to, just always participate, because it's not easy to kind of come up here and talk and find the new things to say and say the same things in new ways. So you guys make this job much, much easier. And I'm grateful for each and every one of you who especially are there and always supporting me and always just hanging out and talking trash, because believe it or not, it makes it more doable. So you guys know.
And just for you younger people, history repeats itself. So don't freak out over this current situation. If you go back to the era of big hair in the 80s, there was a great author named Tom Peters, and he wrote a book called Thriving in Chaos, which is applicable to today.
I think that's hey, that's a great book. I think that's in my Audible library right now.
Tom Peters was the man.
Hold on, I'm checking. Thriving in Chaos. Okay, I think I just put it in there too. I forget why I was looking at it. Was that you who told me about it? Or maybe
No, not me. I just brought it up. Maybe someone else.
Reading your mind. It's in my library. But awesome. All right, guys, are there any other questions, comments, things that we can help you with? Anything that we can say to you? What we're looking for is this right here. This just happened. So we're on the 1 hour. This is 11 minutes into the 1 hour. Let's see if this closes with a full body or a wick. Okay, we might kind of get that retest up. At this point, we're still holding this other, support and resistance we drew. But what am I waiting on? I would want to see my other chart and some of my oscillators personally, or I'd want to see kind of a retest. So I'd want to see this close with the body and not a wick. And I'd want to see it retest a good little portion of that. This isn't a fast mover. I would be looking for the kind of in between this zone, because this zone has the more room. So if I wanted to take an entry, we've already stalled out here quite a few times. The odds are I'm going to be trying to catch the most of this move. And I'm infamous for catching the middle of the middle. So this middle I'm happy with. I don't need the end and I don't need the beginning. I like the break and retest. I like the continuations personally. They're just safer. So that middle pips right there is what I'd be looking to gain. It's anywhere in this area, pretty safe. But we do need it to decide if it's going to break this area or not. So we broke below the trend line. That's pretty good confirmation. Odds are we're going to pull back up, and then we're going to see if we stall out in here some more, or if we do get our break to the downside. So that's what I'm seeing. So, all right, guys. Hey, that's enough. I'm trying to keep these a little bit shorter. This way they can be watched as a recording so we can learn quickly. My goal isn't just to hang out. As much as I love hanging out with you, I want to teach you guys to be independent with your time, your money, your life, and other things. So thank
Make
you.
money so you could go to IKEA.
I didn't even buy a lot of stuff, Derek. I should have, though. I got a little happy in certain areas.
Like I said, I always get lost when I go there. I hope it's never a damn anything happen there, because I wouldn't know where to go.
Oh, come on, they have everything you need. You wouldn't need to leave. If something
Right.
Except finding the door to get the hell out.
No, just stay. Just stay. You'd be safe. You need to barricade the building. Zombies aren't getting in.
Yeah, like that commercial where people sleeping on the bed or the couch or whatever.
Yep, that's right. 100%. Hey, Barbara, thank you. I hear you back there. Thank you for always.
I know everybody hears Barbara.
Yeah, she's the
Well, you're very welcome. Thank you, Jenny, for all that you do. We even love you, Derek.
We do have the coolest family. I'm so excited for you guys. Some of you that are withdrawing and so many that are growing. It's not just money, but now that some of y'all are making more money, let's work on that time freedom and that being effective. So, and I love who we're becoming as we grow and learn in a lot of ways together. So I really do.
Let's eat our jackfruit, people.
Oh, Lord, we got another one. Oh, Lord.
Hey, just if you show me how to make the unchicken chicken, we can talk. But until you show me how to make the unchicken chicken, I'm making chicken. Okay.
Jackfruit pork chops, huh?
That's so bad, guys. It's bad. All right. Good night. Sweet dreams, everyone. We'll talk to you guys soon.
Good night, Jen.
Sweet dreams.